Hey, everybody, Economic Ninja here. I hope you're doing well. Guess what I got going on? We're on the scene of a bank robbery, but actually it's not a bank robbery. These guys actually work. I can never do that. These guys are actually bankers. They actually work for the bank. I know, I get it. They're actually busy taking money out of your safety. Dang it. Safety deposit box. They're actually going into the vault. They're getting your cash. That's what they're doing. Why? Because it's called a bail-in. Now I got a question, a great question from our subreddit forum. And if you guys want to check it out, I'll put a link below. And here's the question. Where do you put cash? Hearing Ninja talk about bail-ins more frequently, not sure if this is just a recent talking point or a brutal reality. It's not just a recent talking point, guys. The idea of bail-ins actually happened way back when the Dodd-Frank Act was passed, because I guess people were just sick and tired of bank bailouts. So Dodd-Frank had a better idea and said, let's go ahead and let you become an unsecured creditor of the bank, and we'll let you take care of their bad problems the next time around. I'll talk about that in a second. Well, you know what? Let's talk about that right now, and then we'll get into the rest of the question, because it's multiple questions actually in one. So first off, bail-ins are a very serious thing. It has been written into law or banking rules, if you will, all around the world. And we've seen this in Cyprus. Cyprus has happened back in the early 2010s. I don't remember it. Sorry, I'm going off of memory, where a bank had issues. And instead of asking the government for help and completely closing its doors, it simply took a percentage of everybody's deposits to make the bank whole. Now, you may think that is absolutely crazy, but it is actually legal. It's legal in America as well. You see, as of right now, you are an unsecured creditor. And like in Cyprus, they actually had this really interesting thing. Not only we're going to take your money, but hey, it's okay. We're going to give you something. You now own a part of the bank. We're going to give you bank shares. That's total crap, but that's really how the world works now. And so a lot of people are starting to really get concerned with bank bail-ins. Why? And they should, because the banks are teetering on collapse. I know it sounds crazy because you still go to the bank, you walk in, you go, hey, how are you doing? And the teller's like, oh, I'm doing great. And let me give you an example today. I went to go pull out some money. I needed $8,000. I went and grabbed some money, walked in there. I said, hey, I need $8,000. And they said, we don't have that much. I actually, be honest with you, I already expected that answer. I've dealt with this before, but I got a little, let's say, I questioned in a nice way. And it wasn't the teller's fault, but I said, I need to know right now, why do you not have enough cash? I'm getting sick and tired of this. And of course, they asked me what it was for. And I said, well, that's not enough to trigger a SARS report. That's not larger equal to $10,000 in one banking cycle. And literally, the other teller goes, how do you know all of our secrets? As a joke. And I said, don't worry, I know a little bit about banking. But they said, oh, I just wanted to really know. I just wanted to know. Like, okay. So I told them. And it was interesting. I asked them and they gave me a very interesting answer. They said, due to the lack of employees, we're only allowed to have so much cash per teller in the bank, period, because each of us essentially sign it out in the beginning of the day and at the end of the day. And that's how they mitigate risk. So because of a lack of employees, that was their answer. Problem is, this banker was pretty young. I know that he was probably still in high school when I was trying to pull cash out, when I was doing an all cash business, buying and selling trailers and tractors. And we had that problem as far back as 2014. So that's okay. But it was a pretty interesting answer. Okay. Well, in the background, the bankers are doing this. And these aren't the people that just work at a bank. These aren't your tellers, your branch managers, none of that stuff. No, they don't know what's going on. I'm not joking. These are your bank executives, and they're dressed as thieves because they are planning on, if they have problems, taking a little bit from everybody's account to make themselves solvent. And then they're going to issue stock in a completely worthless bank that is needing to steal money because it's insolvent. Nobody wants stock in a company like that. Reminds me of Enron. All right, so let's move forward with this question. So the question is, where would you put liquid cash if not in banks? Now, first off, I want to explain something. None of this is financial advice. I'm not a financial advisor. I am a dude with a brohawk and a dream. Very serious. And I don't know why I just talked like that, but it's okay. Just go with it. First off, I highly suggest you open up multiple bank accounts and you separate the types of bank accounts. Have large bank accounts, banks, big banks. I know I'm going to say the word that everyone hates, Chase. The reason why I have Chase is because for one of my companies, two of them, it's easy to do banking all over the country. I can pretty much find a Chase anywhere, okay? Then you have some regional banks, some normal regional banks, maybe that have, 5 to 25 offices in your state. I have banks there too. Then I also have credit unions, because credit unions are governed under a whole different set of rules, some that I can't even explain to you because I just don't know. But my point is that it's important to diversify your risk over many banks, because when we have a collapse, not every bank is created equal. It sounds crazy, but there's some actual banks that are amazing. I'm going to be talking to the owner of one of the banks. I've interviewed him before and he's awesome. And I want to get some information about his bank because I do actually trust this gentleman. All right, moving on. I hear savings could be converted to shares of the company. And we've already went over that. If this is true, or if true, would this only apply to publicly traded banks? No, it would apply to any bank that falls under certain rules and guidelines of the Federal Reserve and whoever enacted that. And I have a feeling, and put this in the comment section because I'm just going from memory, guys, it's pretty much all banks that would be under the Dodd-Frank Act. I'm pretty sure Dodd-Frank covered all of them, okay? So again, diversify they're not just gonna take all your money, they're gonna take enough from all of the creditors to make themselves whole. They wanna stay in business, all right? But if you diversify your assets over many banks, that's good. Also, let's address the cash situation. Many people, and guys, just so you know, I've been around a lot of homes that have burnt to the ground. No, I did not start them. My point being is that I have been there after the aftermath of homes burning down. And there's always two things that are standing on a home that is completely destroyed by fire. There's a chimney and a safe. The sad thing is, what I've noticed is that safes are not all created equal. Some people spend a lot of money on a good fire rated safe. Some fire ratings now to safes that are just available to the general public are good up to 90 minutes of fire rating at a certain temperature. Others are 30 minutes, and some don't have any fire rating, right? So you want to get a good safe. And what I've also noticed is that even a good safe, if the house is cooking off for a while, the cash or paper, like your DMV certificates, pink slips, social security cards, all your vital important documents, not just cash, end up turning to dust. Why? Just it gets so darn hot in there. I've seen rifles completely burned to where it's just the metal left inside. One solution for that, I have seen people go to a Walmart and pick up one of those little Century safes, little briefcase safes. They have a certain fire rating. They take that, put all their important documents, their cash, they put that in their safe, and now you have an extra layer of protection. And that has worked out very well, I've seen in the past, all right? So there we go. Let's move on. It says metals are great. They're talking about precious metals. Are great, but you can only have so many before it stops being feasible. So here's the question. Are you putting in large sums of cash? No, I'm not. The cash that I have, the dry powder I have, does not sit in my house. It does not bury underneath a tree. It is in banking institutions, in exchanges, all around the world. So I have become very diversified. Over years, as you gain wealth, you get more and more diversified. So if somebody has a little bit of money, I suggest diversifying your banks. If you have, let's say, a crypto exchange account, I do have some of my dry powder there. I have it split up all over the place. All right. The last part of the question, I think this is really important. I have several accounts between banks and credit unions, but it isn't really feasible to have anything over a certain amount under your mattress. If all assets are overinflated, where is your money going? Let's talk about our next moves. So the truth is, I talk about the bag theory, where you want to have, multiple bags of investments. You have cash. So that's a bag. Even though it's inside that cash bag, it's split up over multiple bank accounts, credit unions, regional banks, large international banks, right? Then you have your precious metals bag, and that is diversified between, let's say, gold, silver, platinum, palladium, even though I really like silver. Some people tend to do that. Then with your cryptocurrency bag, you have inside that Bitcoin, XRP, Digibyte, whatever you pick, guys, right? Theta coin. Point being is these are all individual bags that are diversified in each bag, but then over the spectrum, they're all diversified, right? Because they're all different asset classes. You may also have a bag of real estate, okay? What I like to do is make those bags equal. So I like them to be equal. Why? Is because what if this month your cryptocurrency bag doubled? Well, I like to, this isn't financial advice, so what I've done in the past, I take that doubling and I take the profit, I sell it, and I distribute it amongst these other bags. Then what happens if all of a sudden my precious metals bag goes up? I sell a portion and I diversify that, okay? And my precious metals is diversified amongst physical, against stored metal, and I have equities, mining equities. Okay, so there's all kinds of different ways that I can pull and liquidate that. Point being is that you don't want one bag to be too big, because what if it fails? Now, that's everybody's personal choice, and you have that choice. But I wanted to answer this question. And again, this is it came from the Economic Ninja subreddit, and it is called, let me just pull it up real quick, just in case I'm forgetting, because I think it's very important to answer these questions. It's r/economic ninja. r/economic ninja, if you guys want to check that out. So guys, I thank you so much. Thank you so much for the great questions. I am watching these subreddit, Telegram groups, all the groups that we're on. I really appreciate your guys' questions. And thank you so much for listening to this video. If you made it this far, let's just go #economic ninja. Ooh, hopefully you had a great day. The Economic Ninja is out.